It's Friday Coffee with your mortgage man, Eric. And today, I'm en route over to We Serve East Valley chapter. I'm trying to do three things at the same time here this morning. That's why I'm doing the video here in transit, which I don't like to do, but I got to get a video out there, especially with what is going on in the market right now. Holy cow, right? This whole coronavirus has done some interesting things to the market, as in interest rates having this seesaw effect. We were down last week at all-time historic lows. And why I'm bringing this up is because, they've swung back and actually have teetered higher than what they originally were before they went down by a smidgen. So what happens is the media out there, well, the media does a lot of things that they shouldn't do, right? We know that. But the media out there is always a couple days, sometimes a week behind what is happening with interest rates, right? So the last of the best of the interest rates we saw at about 11 a.m. on this Monday morning. Today is March the 13th, Friday the 13th, baby. And so earlier this week, Monday, 11 a.m., that's the lowest we've ever seen interest rates, historically speaking, and they have started to tick upwards since that moment. Well, the media is not aware of it, or they're not reporting on it, or they're just ignorant to mortgage-backed securities and what happens on a daily basis with rates. And I think sometimes, consumers think that we're full of malarkey, baloney, when we tell them that interest rates can and sometimes often do go up in one day. And we have experienced that greatly this past week. Tuesday, I think it was Tuesday alone, we lost over 100 basis points on Tuesday. What does that mean, right? What does that equate to? Well, on Tuesday, we lost 0.25%. Sometimes, depends on the scenario, 0.3% in rate in one day. One day. And look, the general public isn't aware of it, right? So you still have people that are trying to get on the bandwagon, catch the wave of the refinance from the previous week. We had rates at all-time lows for like a week, maybe 8 days, right? And so we have people calling in that want to jump on that wave. When I guess I can't blame them, but we're like, hey man, rates they're not where they were yesterday. And then the same thing happened on Wednesday. The same thing happened on Thursday, yesterday. And today, Friday, we're hoping to finally see a plateau or a settling of the deterioration of interest rates. So keep that in mind. Now, let's talk about what that caused. Last week's ultra low, historically low interest rates, combined with the panic of the coronavirus. It's amazing what the psychic of Americans and how they respond to things. It's another topic, right? But what that has caused in the banking side of things is all but a shutdown, because the lending institutions cannot handle the amount of volume that had come in. And I'm not lying, the unprecedented times. I've been in the industry 21 years. People have been in the industry 40 years, have never seen anything like it. And what I mean by that is the amount of loan application volume that came in shut some of the banks down. Some of the big banks just simply said, we're no longer accepting mortgage loan applications. We can't. There's no one to take the app. There's no way to get what we call the pig through the python. We've never seen anything like that. So what is going to happen is the turn times for every lender and every bank is going to swell. Now, if they're smart, they'll keep the turn times low for purchase products, because you always got to treat the purchase with more priority than the refinance. So refinances could end up taking 2 to 3 week turn times in underwriting once that pig hits the python. So that will also affect the purchase market inevitably. Probably not going to be getting 20, 21 day close of escrows anymore. Probably going to have to go back to 30 days. Oh my, how terrible is that, right? I mean, holy moly, you got to do 30 days close of escrow. Oh my goodness. Anyhow, so here's a story. Our CEO of our company on Tuesday morning. Now keep in mind, Tuesday morning, rates were probably 200 basis points, 225 basis points better than what they are today. Wow, that sun is something else. And so the CEO of our company called in, acted as if he was a consumer inquiring about a refi, called into Wells Fargo. Took 40 minutes on hold to get somebody on the line, finally got somebody on the line, and the bank, Wells Fargo, their rate was priced 0.5% over basically where everyone else was. And we started to see more and more of that through the week because the banks can't handle the volume, so they inflate their interest rates to deter more volume coming in. Like I said, these are unprecedented times in the housing and the mortgage industry. We've never seen anything like it. And obviously, we all know this coronavirus thing has created just some mass hysteria, panic. And I'm not saying we shouldn't treat it seriously, but oh my goodness gracious. If we don't settle down and stop operating in panic mode, there's going to be a lot of families across this nation that will be hurt financially. And look, I don't mean, you lost a good portion of your 401k, because that's happening regardless. I'm talking about families that may have to file bankruptcy. I'm talking about small businesses that may not be here in 2 months. And see, we don't think about those things. We don't think about the small business guy that's reliant upon his community to not be in fear and hoard all the toilet paper and stay inside. We have got to operate at a different capacity, or there's going to be a lot of people hurt in this melee of the coronavirus. Now that's my 2 cents on the coronavirus, but as you can see, it does segue into mortgage interest rates and what has happened with the market. The Dow Jones, the stock market plummeted, and what normally happens when the stock market isn't doing so good, the bond market does well. Well, that didn't happen, right? On Monday afternoon, Tuesday, Wednesday, and Thursday. It was knee-jerk reaction. Rates went right back up. So here's my advice. If you're thinking about refinancing and somebody has quoted you like 3.25%, something like that, and you're trying to hold off to get 3.125%, that's absurd. Because you may not get it, and when rates go in the other direction, they go quick. So just keep that in mind. So the thing to learn about this is, if you got a rate, lock it. Lock them while you got them. Don't try to play the market and think you're going to get another 1/8 better, and then all of a sudden 2 days later rates went up 0.75%. And that goes for loan originators, that goes for real estate agents that are giving any advice to their consumers, and that stands for a consumer as well. If you got a rate where the refinance makes sense, just lock it and move on. Now, here's one thing I can tell you about refinances. Even with rates going down this low, I know a lot of people don't want to hear this, and the Quickens of the world don't want to hear this, but most refinances don't make any sense. They don't. Because you're going to do a 30-year fixed mortgage back into a 30-year fixed mortgage. You've been into mortgage for 3 years, 5 years, right? Think about this. In those 3 years, you refinance now. The 3 years that you had your mortgage, you probably paid 150 to 200% interest on the monies that you borrowed because it's all front end loaded on interest. See, people never understand that, or they don't want to understand that. They don't want to think about it that way. It's like, if you are going to refinance, reduce the term. Go into a 25-year, go into a 20-year, 15-year, 10-year, because now you're making financial wise sense about what you're doing. To just start a 30-year fixed mortgage over again, 80% of the time, in my opinion, it ain't worth it. Now look, sometimes it is, right? You're in hardship. There's things that happen. You have to lower your bills. Somebody got laid off. Somebody got sick. Totally understand that. But you've got to understand that there are lenders out there that are shady, and they will try to sell you on $60 cheaper a month on your mortgage payment. Like, really? Is that really what we should be doing? Starting my 30-year fixed mortgage over again, incurring a couple $1,000s in fees to save $60 a month? Is that really the best interest of the customer? So keep that in mind. Most refis, they don't make sense, but I get it. We're in America. We're Americans, and we do everything bigger here. So as soon as the hysteria starts, as soon as the panic starts, as soon as the frenzy starts, everybody wants to jump on that bandwagon and go out and refinance and take all the toilet paper off the market, right? Now, that's where we're at today, Friday the 13th, Friday the 13th, in the midst of this very unprecedented times. And it's Friday Coffee with your mortgage man, Eric. 602-757-2171. See ya!